Good morning, everybody. It is a market holiday, right? It is a special day out there for markets. Special day in all of our hearts. CPI, 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 CPI. We will be diving into that in just a moment. Of course, it's going to be an interesting one. We've got a jam-packed week, and today is really where it all kicks off. T-minus 15, 14 now minutes to go until CPI comes out and possibly rocks our world. We will see. We will see. We will see what happens. There's not really any sense in trying to guess what the numbers will be, beat, not beat, whatever. We'll just see what happens when the numbers come in. We'll make an assessment based on what the market does, and we will prepare with a logical game plan as to what we should or should not be doing with trading, with price, in respect to trends, in respect to key levels, all that good stuff. All that good stuff. All right. So we'll start here in just a moment. How about we wait another, because remember folks, we don't want to do any price action analysis prior to the numbers coming out. Otherwise, we're just going to have to redo all of the work that we've done if there's a big reaction. So let's give it a couple of minutes to let some folks trickle in, and then we'll start the process as we always do. Like Byron is saying, drop a like button. You know, that's always helpful. Drop a like button. Hit the like button, and whatever the kids say these days. Hit the like button. Smash the like button. Hit the thumbs up button. What's that guy? Graham Steffen's like, I would really appreciate it if you went down below and stomped on the like button 200 times, and then because of that, I'll show you a picture of a kitten or something like that. That man's crazy. But hey, I mean, he's doing something right. So anyhow, good morning, folks. I like what AP says. Just keep it simple. Long the like button. That's it. Go long the like button down below. Traders know what that means, right? Scrolling up just to see who's in the chat here this morning. Mickey, good morning. We've got Roger Tutt. Who else? H Productions is in the building. David Ball, Davey Day Trader. Philip M. Nice to see you, Philip. Feel like it's been a while, but good to see you. Cipriano, Kid Ray, Chloe, Michael Cobble, Trading Vibes. Mr. Prayer is in the building, of course. Karen, it's Karen G. Quest of Quests, Gian Park, John Cardozo, good morning. We've got Informity, Crypto Commando, Big Stick is here. Classic name. Paul, good morning, Paul. We've got Willow Puff, Rose, Rebecca F, Sammy Sams, just being Dwayne. We've got INF the Based Homie. We've got Dwayne Dooley as well. Who else? Stevie J, Black Diamond Off Grid, Capitalist Dog, Rebecca F, Siege. I mean, the list goes on and on. Rebecca. We got Rebecca. Victor Y. Pete and Repeat. Foo. Who else? Maria, Starlight. Man, Jay Hicks, Charizard, Daryl B. The list keeps going. Raz. DP, Byron Jones. Fancy French Wood. Monty. Jim and stuff. Oh, man. K-Dog. Oh, it's nonstop. I do think that I got everybody now, though. And good morning. Nice to see you all. Again, we're just burning up a little bit of time here, letting some folks trickle in. That way, the CPI reaction can be as pure as possible when we get closer to 8:30. Roughly 11 minutes to go. 11 minutes to go until the big bad data drop comes, and we figure out what this market wants to do. So let's start breaking things down. We'll start walking through our process slowly, just understanding what's going on out there in the markets this morning. So 8:30, once again, that's in roughly 10 minutes now. We will be getting the CPI month over month, year over year, and core. This core will also give us a year over year reading, but we might have to go to a different tab to find that. Regardless, what we're watching for here today is, in my estimation, given the move into the afternoon yesterday, CPI is going to have to come in at or well below expectations if we even have a shot of holding it. If we come in at or above expectations, I think that that's a really, really harsh sign for markets, and not, obviously it may be on the back end an implication that Jay Powell will, instead of skip this meeting on Wednesday, he will actually raise rates. So depends on how aggressive these numbers are. One thing that we can observe here out of the core CPI year over year is the aggressive forecast beat, or just, continuation move in the downward direction from prior. If you recall prior, if I just open up this little chart tab, if you recall the forecast was for 5%, and we came in at 4.9. So it's not like we beat the previous forecast by a lot, and the indication, that we're going to get a 4.1 is just it's an aggressive move lower, right? A 4.1, not that we chart this graph here like a pure technical chart, but you can see the drop off there would be quite precipitous and really reflect what we had from here to here. So we'll find out. Again, I don't really think it's worth trying to predict what the market's going to do, what the number's going to be. Some people might make the argument that yesterday's rally, someone leaked the CPI, and the market already knows what CPI is going to be. I don't know. To me, it doesn't really matter. I don't have any positions on. I don't plan on trading the pre-market here with you as the CPI number is being released. So it's just like whatever, right? Whatever the number comes out as, it comes out as, and we will react accordingly. So, it's worth maybe thinking about how it might come in. If you think about prices around you, I don't know about where you guys are at, but things have remained pretty stable. Now, I want to be very, very clear about this, right? Prices have sort of stabilized at elevated levels, right? They've done something that looks like this. They've gone up, and then they've started to flatline. Maybe they're doing something very slowly creeping in the upward direction, right? So don't forget, folks, that this technically would lead to flat-ish inflation, right? This is what leads to this here, rise over run, leads to your aggressive inflation. And then when it does something that looks like this, you're talking about reads like this being very reasonable, or a drop like this being very reasonable. So it's observable, at least where I'm at, that prices are slowly stabilizing at these higher prices. It feels like, oh my God, inflation's still so high and everything's going crazy. But inflation measures the rate of change, and that rate of change is slowing down. Rate of change is slowing down. Even though things still feel expensive, the rate of change is slowing down. That's my observation. So I wouldn't be surprised if we came in at the forecast, but once again, it's not really my job to predict what that's going to be. It's just anecdotal, what I'm telling you here. So with that out of the way, you can see our beautiful little countdown timer is in play. We've got 7 minutes to go until the numbers come out. Yeah, Rebecca F., you like that word of the day, precipitous? I thought it was a good one. I thought it was appropriate for this morning's stream. Glad someone picked up on that. So we'll continue along, and we'll take a look at some stock-specific headlines here this morning. Top-line figures are basically green, mildly green, though, out of the index futures, Dow being unchanged. This is only up 9 basis points and 23 basis points out of the NASDAQ. Now the Dow is red by 1 basis point, so pretty much flat out there. It's nothing, nothing crazy going on in the futures. Stock-specific headlines here. Inflation report on Tuesday will be critical for the direction of Fed policy. Yeah, no kidding. Thanks, CNBC, for the most obvious headline in all of forever. What else is going on over here? An NVIDIA-based or backed platform that turns text to AI-generated avatars boost valuation of $1 billion. I don't know what that company is or what it's called, but that's kind of interesting. Deep fakes, right? Deep fakes. What else? Cathie Woods building a $47 million bet on Meta after exiting the AI winner NVIDIA far too early. So Cathie, just, it's tough. It's tough to be in the spotlight like that and her portfolio to always be under scrutiny, but I guess that's what you sign up for when you turn into a fund manager like that. So anyways, the whole world wants AI, and the market will deliver. That's from Sam Altman, the CEO of OpenAI. That's ChatGPT, right? So that's interesting. Toyota shares surged 5% after announcing plans for next-gen battery EVs. What else is going on? This is interesting. Canadian port workers authorized strike in a landslide vote, a significant blow to the West Coast trade. So supply chains may see a hiccup there that is bad for inflation. Bad for inflation. What else? Manchester United shares pop in pre-market trade as Qatar Media hints at takeover bid success. Goldman upgrades Devon. That was a trade idea from the weekend video. So that is a nice little move in the upward direction there. What else is going on? What else is going on? Oracle beats, and last night not really last night, but this morning they're opening on a gap up. We'll see that in just a moment. What else is going on? Stock-specific stuff. Anything crazy here? Not really. FTC files to block Microsoft Activision as deadline approaches. Remember that they were sort of looking for a buyout there of Activision, and it was just too much of a monopoly concern. So that is why that's not going through. And downgrade to a regional bank. Doesn't look like there's any indication based on the image. It's just a random ATM. So that's not very helpful, but that's it. That's really it. Apple Vision Pro headset sticker price may not matter, Kramer says. I think it's going to matter. What did it come out as? Like 3,000, what was it? 3,900 bucks? 39.99 or whatever? Is that how much it cost? I don't remember. I thought it was somewhere close to this number right here. If that's the price tag, I don't know. I feel like that's not really, that's not going to be a household item for most people. Number one, it's just like, who the heck wants to walk around with this thing strapped to their face? And number two, for that price. But anyways, $34.99. Okay. So, I was off by $500, right? It's still really expensive. You could buy, or at least you used to be able to buy a really crappy used car for that, right? So anyways, that's really it for stock-specific stuff. We know that the earnings calendar is really mellow here. There's nothing going on. We know that Oracle after the close was the only important thing to watch, and the next important thing to watch will just be Adobe after the close on Thursday. We've got some time in between, nothing else really worth watching. So why don't we do this? Let's go ahead and build out a little bit of a split screen here so we can see exactly kind of what's going on with the ES futures in the background. I'm just going to go back over here and do something like this. So 3 minutes to go. Again, we don't want to get too far ahead of ourselves with any analysis performed, but what we'll just do is roughly start walking through kind of where and what's going on currently. So we're clearly opening right at the prior high of day. You can see your prior high of day was up here. Really, really impressive break to the upside into the afternoon session yesterday. Now, once again, we could make the argument that sure, maybe someone out there did leak the CPI print and someone out there knows exactly what it's going to be. The bank's caught into it and, whatever. Some kind of algorithmic trade was driven there. Maybe there was a CPI leak. Maybe there wasn't. If you just think about this from a very textbook perspective, we were breaching a prior high, right? We had this little opening range that was grindy and really nasty. Then we saw a slow grind higher all day. And then when we test this prior resistance point, boom, we break it. So, the very, in my estimation, obvious explanation for this type of activity is simply that anybody who is short from Friday of last week is just squeezed out, right, over Friday's high. Friday's high was a very obvious place to have your stop loss. Big inverted hammer on the daily time frame chart. There was no breakdown of the Friday low, so there's no new short on the table. Basically, I think that this could easily be attributed to a short squeeze into the afternoon. Break Friday's high. Nobody wants to be short over Friday's high into the CPI print, into the close of Monday's session. So, again, I think you're putting on a little bit much of a tinfoil hat trying to just, explain this away by saying, oh, it's just a CPI leak. Someone knows exactly what's going on. The market had to break out because of that. Little bit tinfoil hattish, all right? Same thing can be said about the NQ. Right, if you go on over to the NQ, it's not really a surprise where the breakout came from. If I just go to like an hourly time frame chart, and then with about a minute left to go, I'll go back to the ES, we'll drop it down to a 5, and we'll watch closely. But, look at this very perfect flat top, all these areas of resistance, right? We go opening range or whatever, slow grind, and when it breaks, that's where the market starts to take off. So once again, I'm not really convinced that it was just, a CPI leak or whatever into the close there, because you can see the NASDAQ started to perk up out of this flag when we started breaking the prior levels as well, whereas the ES only perked up on this move here when it broke its level, right? So when the two things broke the key level, that's when they started moving. NQ started moving here, and the ES started moving here, but the ES was breaking its Friday high at this point. So again, a little bit tinfoil hattish, but let's go back to the ES with 15 seconds to go. And let's take a closer look at the price action here and see what's going on. So I'm going to leave it full screen at the moment. And based on the market's reaction, I'm going to make my best guess as to what was technically going on with the numbers. Here's the book getting pulled flat. And here is 8:30. Boom, we're off to the races. Sharp reaction in the downside direction. Liquidity has been pulled, or it was pulled earlier. You could see the market literally stop here, remember? And now we're letting the dust settle. So initial reactions are red, but they're not big red. So my first thought is that CPI couldn't have really come in as a huge miss to the upside. If it did, this would be, way down here, testing the prior low of day. Strong bullish reaction coming in now after a downside test. Don't say it in the chat yet. I am waiting for this dust to settle, and I'm going to make my own assessment. I know someone's going to say it anyhow, but all right, so let's give this thing about a minute or two to settle out. We've got 8:30 and 45 seconds now on the clock. So we've got about a minute in, coming up here in 10 seconds. We'll be a minute in, and the dust is kind of settling. There's a little bit of volatility here, but there's really not a lot of range expansion going on. If you look at your original overnight range, we have overnight low, we had overnight high, right? There's not a lot of range expansion going on here right now. So my first thoughts would have to be that we're coming in like right at the expectation or maybe slightly below. Maybe very slightly below expectations. So at or below expectations is my belief, based on the rally here holding so far, and also the overnight range not really continuing to expand, right? If it was a blowout beat, meaning that we came in at like 3% or something like that, I would have to imagine that the market would be trading at like, I don't know, 44.20, 44.50 or something like that. We're just not there. If it was a miss on expectations and we came in at a 5% read again, the market should have been trading down here at your prior low of day. So if I had to guess, I'm going to say we came in at expectations because we're basically unchanged from the overnight range. So I'm going to say at expectations. That's my guess. Let's take a look. How good was the guesswork? A little refresh here shows us, oh, would you look at that? Would you look at that? Across the board, or not actually across the board, but in the non-core reads, we actually got beats. So 1/10 of a percentage point beat here, 1/10 of a percentage point beat here as well. So pretty good. Pretty darn good. And these were aggressive estimations. Remember that if we look at this graph, right, really aggressive, we print a 4.0, that's down here. A 4.0 is down here, so a solid little drop-off, precipitous, as we called it earlier, in the year over year. That's a good thing. That's a really, really good thing. That is what the Fed wants to see. It probably does mean that there perhaps will be a pause in the meeting on Wednesday. As Jerome Powell will refer to it, he'll say, oh, we're skipping it. We're skipping it this time around. We're just going to skip on this meeting. All right, Powell. All right. But anyways, the read looks good here. A 4% versus a 4.1 expectation from 4.9 prior. That's a really good move in the downward direction. So it's not earth-shattering, but it's definitely a positive move in the right direction. Again, think about these things as directional vectors. The exact number is not so much the important part. It's moving in the right direction, continuing to show that inflation is indeed in a downtrend. The core month over month, is flat at 0.4. I'm really curious to know what the core year over year is. Can someone put that in the chat? I'm going to ask the chat as a resource. Can someone tell us down below in the chat what the core year over year is, please? Kind of unfortunate that Forex Factory doesn't display this, but what is the core year over year inflation read? Core year over year CPI, if someone doesn't mind. Going to look for a couple of answers here. Gian Park says 5.3. 5.3, is that correct? Is that correct? Can we have at least a couple of other people confirm that? 5.3, 5.3? Yeah, 5.3. Okay, so 5.3, and then if you don't mind, could you, now that we've confirmed that 5.3 is the number, could you tell me what the prior was? Could you tell me what the prior was? Just so we have a reference point for whether or not we're actually moving lower out of core. Previous 5.5. Thank you, Panko. 5.5. Okay, so it definitely moved lower. It moved lower, but not by a huge degree. Moved lower, but not by a huge degree. So overall, the reads this morning, they're not horrible, right? If the bears wanted a resurgence in inflation, then these numbers are not it. These numbers are not it. This continues to show progress in the downward direction, albeit slow. It is progress in the downward direction for inflation. So with that said, now that the numbers are out, now that the market is sort of settled in, we've gone on for about 5 minutes post-release. Let's go ahead and get started with the true analysis of like what we should be paying attention to, what the focus should be for this morning session. So here we go. 4-hour time frame chart always kicks us off on the ES. We're going to zoom in a little bit. And I think it's very, very clear that we still remain in an uptrend. The CPI print this morning is not enough to knock us out of an uptrend, and it wouldn't have been enough even if we got a rotation all the way down towards here, prior low of day at 43.50s. We'll talk about that in just a moment, but for now, lows, higher lows, higher lows, higher lows, and very reasonable opportunity for a higher low pullback to be anywhere above the top of the bull flag breakout from the 4-hour time frame chart. So market remains bullish on the 4-hour. Clearly an uptrend, clearly just produced brand new higher highs. We can certainly afford some sort of higher low pullback. And once again, folks, it's worth doing this every single day to remind yourself that you better not fight the overwhelming trend. Or at least if you are going to try to short the market, just understand where you're at in the trend sequence. So 4-hour chart's been covered. Let's take a look at the hourly. We know we're in an uptrend. We know that we can technically afford to pull back and test the top of the flag range. And the same thing would hold true on the hourly time frame chart. But there's a better area to pull back to. We'll talk about that in a moment. But lows, higher lows, certainly higher lows in here. Highs, higher highs, higher highs, higher highs as of this pre-market session. We'll adjust the overnight range in just a moment. But on the hourly time frame chart, of course, the most ideal pullback level would just be to stay over Friday's high. If you respect Friday's high, then that keeps the sort of squeeze from yesterday afternoon on the breakout in play. Keeps it in play. It keeps all of the shorts who are potentially maybe still in positions from the Friday session underwater for sure, even if they had the best location at the top of Friday's range. So the most ideal pullback is really closer to 43.68, 43.70, this gray bar. We'll see it more closely on the 15-minute chart in just a second, but I do also want to point out our upside targets. It's quite a ways away. It's quite a ways away in the upward direction. If this breakout continues, we're looking at 44.60 roughly, and just remember that that's going to get you close to your, in the SPY, we're talking about 437, right? So 44.60 is your upside ES target coming from prior structure off to the left. We did our whole contract roll adjustments yesterday. That is the new level, 44.60 on the upside. All right. So mission complete on the 4-hour, mission complete on the 1-hour. We understand the context of this market is still incredibly bullish. There's no reason to really be fighting that at this point in time. Let's take a look at the 15-minute time frame chart and build a game plan based off of our shorter time frames. What do we see here? Let's ask ourselves the 3 questions and get really granular about a game plan. So question number 1, where are we opening in relationship to the previous day's range? Here's the previous high. Here is the previous low. We are opening on a true gap up this morning based on the CPI reaction, keeping us over the prior high of day. That, of course, is a bullish indication, and it instantly puts into play the gap rules. So we will be discussing gap rules on this morning's session. Question number 2, because we can skip 1.5 when we're opening on a gap. Question 2 is where are we opening in relationship to the overnight range? And we've got to rightfully adjust our overnight low to over here and our overnight high to over here. So overnight range, we've got a high, we've got a low, and we're opening in the midpoint of that overnight range. So there's not a whole lot of directional takeaway from that perspective, especially when it comes to the gap rules. So we'll put a little neutral tilde here. The risk reward's not really favorable for a fade, at least against the overnight high. You would have to produce a very, very weak little pop or something, then get through the opening print. We'll talk about gap rules momentarily, but just take away that from question number 2, at least as of right now, away from that overnight high, risk reward is not really as favorable as it could potentially be compared to if we were pressing into a new overnight high, right? Question number 3, last but certainly not least, what is the overnight inventory position? Net long, net short. To do that, you extrapolate the settling price, how much time was spent above, how much time was spent below. Almost all of the activity here is net long. The only indication was a little bit of that flurry short on the CPI print there moments ago, but it didn't stick. It certainly didn't stick. So we're still virtually 100% net long. I would say that we might be 95. I'm just going to say 95% net long, and the reason behind that is simply because of this upper wick. Right, this upper wick certainly represents some sell side pressure. It would be 100% net long virtually if we were hanging out there towards the overnight high. So with 95% of the inventory net long and a gap in play, I definitely think that a fade could be on the table, but we just need to make sure that the risk reward actually makes sense to take this trade in the first place. So let's talk about gap rules now. We can take a mental screenshot of what's going on here with our 3 questions. Grab a little screenshot there, and let's continue along. So clearing up the screen and talking about our framework, gap rules would tell us that if we're opening up here, right, what we want to see is a failure at the overnight high, so staying underneath this level, and then a rotation back down through the opening print. We will look for a closure of the gap underneath us. That's your prior high of day, 43.8950. 43.8950. Why does this work, right? Well, number one, we know that there's 100% net long overnight inventory, and it certainly just got more net long as this volume spike on the CPI unfolded, and we saw the big move up, right? So if we know that longs are positioned in here, longs are positioned up here as well with bad location, they basically want to see the overnight high get taken and a continuation move to get paid. If they do not see that, aka we see a failure of the overnight high, then we're looking for a breakdown back through the opening print to close the gap and tag up to your prior high of day. That would be a gap close. And when and if we get here, we will look for a gap fill reversal, right? So 43.8950 would be a first place to look for support on today's session if we see a pullback. The next best place that we were talking about before on the higher time frames like the hourly would be down here. 43.70, 43.68 is technically value area high. Yesterday's value area did remain low in the profile, and then the break into the afternoon produced, it wasn't technically a spike because it wasn't into the close, but it did produce a small string of single prints. We'll see the market profile in just a second here, but this would be your next pullback zone, all right? So the gap rules framework, we are looking for shorts to close the gap on this morning's session, but let me be very, very clear about this, very, very clear about this. The number one thing that needs to happen is that we need to be underneath the overnight high. That's first and foremost. Number two is that we should be underneath the opening print, right? So if we do this, fine, our risk reward makes sense. We have this as our stop, high of day, target the gap close. That's a decent risk reward short. If the market does something like this and then breaks the opening print, you got to find a different place to put your stop loss. You can't use the high of day. You can't short through the opening print, and you can't target this with a one-to-one risk reward. It would really require that instead of looking for that entry right here, you would get a smaller bounce or something, dead cat off the opening print or whatnot. Stop goes here, then you can look for that. If this unfolds, then maybe it's on the table. But if it doesn't, and we just rotate straight through the opening print, much more of a difficult trade to pull off. The only other reasonable thing I could see unfolding in that instance would be, okay, we do this, right? Here's your opening print. We'll just go across with a dotted line. It's a horribly drawn in dotted line, but you get the idea. If we break back down through it and then go lower high on the backside, like this, right? Then you can short back on that opening print looking for that rotation, better stop location, right? So that's kind of those are the two ways that you could potentially get involved in this fade on the morning session. And keep in mind, folks, this is textbook if the market wants to cooperate nicely. If the market doesn't want to cooperate, we may just do something that looks like this and then start, gap and go. It's not, market can gap and go. It's definitely an option. It just becomes more difficult to trade, right? The tradable outcomes are really waiting for that framework to play out here. The not so tradable outcomes are just gap and go, and everybody gets FOMO, longing at bad location, and then you're really subjected to the pullback risk that exists there, right? We know that we're sitting on higher highs. We don't have an equal high breakout anymore. That was really back here, right? This was the equal high breakout. We're sitting on a higher high. We're gapping to new higher highs. If you just long this on a gap and go, just understand that your location is bad. Your location is bad. You're buying the higher highs, and you're subjecting yourself to the pullback risk. So if we get a gap and go, meaning that the market chops around, breaks or whatever, and starts doing this, your idea is to look for the first higher low pullback up against an upward sloping VWAP. And then from there, right, if we can position here, our risk is at least defined with a stop just below the pullback and the VWAP, ideally if it's confluence, one and the same, right? So that's what we'll be watching on the open. Obviously, as we get closer to the 9:30 bell, the open may be up towards the overnight high. It may be closer to the overnight low. We will keep you posted. As of right now, it is creeping slightly higher towards that overnight high. So the risk reward is getting better. Remember that the higher we can open towards the overnight high, the risk reward is actually better for our downside fade and the gap rules to pan out. All right? That's the framework for up and down on the open, right? Gap and go, we're looking for the first pullback over VWAP, failure of the overnight high, short through the open, looking to tag up to your prior high of day. That's a closure of the gap, and then we will look for a gap fill reversal off the prior high of day. So anything that looks like a hammer candle down here, that's a really bad drawing, but you get the idea. There's your hammer, there's your double bottom, there's your inverted head and shoulders, whatever it may be at 43.8950, there it is, 43.8950, that kind of goes, right? That kind of goes. That's your ideal gap fill reversal. If we do not hold there, right, let's talk about the what ifs. The what ifs. This is textbook, right? If I had to rank order, I'll get to the rank order actually in just a moment, but what if we just break into the prior day's range? Okay, well, anything that builds out a flag here and breaks the overnight low, that's where I would look for a bit of a stronger flush to get to your value area high. That's that 4370 mark we were just talking about, the breakout point from here, and also Friday's high of last week. The reason that I would look for a better short through this is because we have single prints right here, right? We have single prints right there. So let's take a look at those actually on the market profile, all right? Let's take a peek at our market profile. It's going to be over on this screen here. I'm just going to drag this across so we get a nice full view of what's going on. And that way we can pick off the flip. All right. So looking at the market profile on the ES, notice there's your single prints, right? There they are. That's the basically the equivalent of the breakdown of the overnight low. Overnight low should be here. It's not going to fill it in because it's CPI madness, right? But overnight low should be right here. If we break that, you can see the volume profile goes there. If we break that, that opens the door for the single print rotation into the top of value area high. So that's the better short indication in my estimation for today's session, just because you can see clearly the thin structure that existed on the previous day's session. Single prints, thin volume structure, the whole 9 yards, right? So that is the downside. This is why it's relevant looking at the market profile. It's just a great visual of understanding where those levels are. And once again, it's basically your overnight low, 43.80.50, and then value area high is down here at 43.68.50. 43.68.50. All right. So back on over to Thinkorswim. We understand where that is, right? This is what we were just looking at right here. A breakdown of this closes those singles. Okay. Everybody's on the same page. Everybody understands the few structures and frameworks that we're thinking of. Here's, if I had to rank order them, what I would prefer to unfold on the open. My preference would be for this. So situation number 1 on the open would be a gap fill reversal, meaning that we open here, we test the overnight high, we fail it, come back down through the opening print, tag up to your prior high of day, reverse off of it, and then we build out a new uptrend from there, and we'll look for continuation. That is number 1. I'm just going to put GFR over here, gap fill, and then R for reversal, right? Gap fill reversal, very, very tradable. We know the framework, we know the levels, we know exactly what we should be looking for in that instance. Number 2 would just be the gap and go. The reason I would want to see a gap and go and not a deeper pullback into range is simply because that we are in an overall uptrend. 4-hour uptrend, hourly uptrend, 15-minute uptrend. We're breaking out of a bull flag from last week. We saw a strong period of consolidation. I would prefer to see a gap and go. So we're going to put G plus G here for gap and go as situation number 2. Remember that looks like this. We start breaking out, and then any first higher low pullback over an upward sloping VWAP, we're looking for a good risk reward here. And obviously we want to make sure that the internals context is correct. We can't just blindly long it up there. We want to make sure that the context of the trade is right. It's just a mild pullback. We need evidence of a bottom being formed here. We can't just buy it at the VWAP if we've got large red bodied bars. We need some proof, but that's the general concept, right? That's number 2. Number 3 would be your further pullback into range below, right? So that would look something like this. And I'll just put DPB, deeper pull back, DPB. That would look something like this, right? Maybe we just close this gap instantly, lower high, break here, consolidation, and then flush into the afternoon. The timing on these drawings is incorrect, but you get the idea, right? Deeper pullback gets us to here, breaking down through the thin structure we just saw on the market profile. All right, so situation number 1 is this arrow right here, gap fill reversal. Situation number 2 is gap and go. And situation number 3 is the deeper pullback on today's session. All right, that's it. That's going to do it for the ES. We have our game plan. We know exactly what we're watching for. We understand the psychology that's in play. We know why we'll be watching for a gap fill. We know why we'll be looking for a gap fill reversal. All that's been covered. We're good to go, right? So that's the ES. Mission accomplished, mission complete. Let's move along and take a look at our good friend, the NQ. What's going on with the NASDAQ? NASDAQ futures, load up the NQ. And we'll start on the 4-hour, and then we'll start adjusting as we get lower, the new overnight high and low that was set during the CPI volatility. I mean, look at this chart as I just leave it zoomed out to the default 4-hour, view time interval. I mean, is this in an uptrend or is it in a downtrend? It's Very, very clearly moving from lower left to upper right. Higher lows, higher highs. It is clearly in an uptrend. Even if we zoom in and get more granular on the 4-hour, this is clearly an uptrend as well. We're sitting on brand new higher highs. Is it reasonable that the 4-hour could pull back and search for a higher low? Absolutely. What's the key level? Just like in the ES, a pullback to your prior breakout point here for a higher low. Totally reasonable, totally respectable in terms of turning prior resistance into newfound support on today's session. So a deep pullback is even okay out of the NQ after this gap up. Let's take a look at the hourly time frame chart, see what's going on as we move down. So this starts to look even more impressive to me because we had this long period of just really choppy up and down, down, up, right? And now we've resolved this range in the upward direction. I mean, when we had it zoomed out on the 4-hour, we could see it as kind of a bull flag. But the ES had a nice, it was just a 4-day balance, right? And it was perfectly sideways. It looked more like this. The NQ that's formed as a flag range here on the 4-hour chart, much more difficult, right? It did not cooperate as nicely. Big breakdown last Wednesday, full recapture, right? This is your Friday. So overall, the fact that this is resolving higher does strike me as a significant data point, just considering that, again, there's multiple opportunities here for the bears to produce a lower high. Think about this, right? We know that this was really like a head and shoulders. We broke the neckline. This was a strong opportunity for the bears if they were going to be stronger, if sellers were going to be, really step up here and make a top. That was a big concern, right? A big concern would have been a retest of that neckline producing a lower high. It just didn't happen. And look at where we're trading now. We've just produced a brand new higher high. So I don't really think it's fair for anybody to look at the market objectively and say, oh no, the bears are in control of this thing. They're going to send it back lower. It's like, all right, well, if that's... Think about it like this. I saw this on Twitter yesterday, and it changed the way that I sort of viewed the argument of bull versus bear, right? If you are a market bear right now, you have the rare opinion, right? You have the opinion that is a clear... How should I word this? It's clearly less than the majority, right? If the market's doing one thing, that is a 100% representation. It is a pure representation that the beliefs of market participants right now, as a whole, net, is more positive than negative. So if you're hanging on to bearish sentiment, just understand that you fall into the minority and the majority of participants are actually bullish, right? Yeah, you could call it contrarian. You could call it whatever you want. I mean, is it, are you technically being contrarian? Yes. But, I mean, at the end of the day, the market reflects the net aggregate opinion of all of its participants. And right now, because it's moving higher, it would only be reasonable to say that the market participants, net, are more bullish than bearish. So, with that out of the way, hopefully it doesn't impact viewership. Hopefully we don't have the bears dropping a thumbs down and leaving the stream. But let's go ahead and continue through our levels. Let's talk about what is pertinent here. Obviously, on the gap up, right? We'll talk about that in a second. We're forming the higher high. We can totally pull back, find a higher low. If you want to short it intraday, that's fine. But net, we're in a strong uptrend 4-hour and hourly time frame chart, even the 15. So let's go to the 15 now. Actually, before we go 15, just want to show you that we are coming into our next overhead target here. We mapped this out yesterday. That's between 15,138 and 15,169. Call it 15,170, right? So we are coming into resistance here. That's something to be very, very mindful of on the upside out of the NQ. Right? If we continue to get a little bit of a push here on this gap and go, I'm not sure I would be pushing my luck with a new money long sitting at resistance here. So we'll get to that and look left in just a moment. But let's go 15-minute chart first. Let's take a look here at our price action and what's going on. So rightfully adjusting our overnight high to its new position. There it is. Rightfully adjusting our overnight low to its new position. There it is. All right, 3 questions that we always ask. Question number 1, where are we opening in relationship to the prior day's range? Here's the high, here is the low. We are opening on a true gap up, well outside of the previous day's range, so strong up arrow here. And once again, gap rules are in play. We'll talk about gap rules just as we did on the ES for the NQ. We'll talk about the numbers here. Question number 2, Where are we opening in relationship to the overnight range? We're pressed into a brand new overnight high just moments ago here. That is more bullish than bearish in terms of sentiment, but in terms of risk reward, it actually sets up a better fade in the downward direction. So that helps the gap rules. Question number 3, overnight inventory on the NQ. Is it any different than the ES? Not really. It is 100% net long for all intents and purposes. Let's go 98% here. Give the bears a little bit of credit with that rotation underneath on the flash of volatility from CPI, but 98% net long. All right, what does that tell us? Again, gap rules very much so can play out. We can see an inventory correction. The risk reward is favorable at the overnight high. So here are the gap rules for our NQ. We want to see a pop over the overnight high, a failure there for the buyers to get continuation, because remember what that represents is that we have trapped buyers up here at the top of the overnight range, up here pushed into the overnight high post CPI with the worst trade location as a long, right? Terrible trade location as a long. If we fail for those people to get paid over the overnight high, and I shouldn't say we, but if the market just fails to get acceptance over the overnight high, we will look for shorts back down through the open as these people with terrible location close out to fade the gap, right? There's very little structure here. Very little structure. A gap represents bad structure. So tagging up to your prior high of day brings you back down to 15K even. 15K even, absolutely incredible. And then when and if we get there, we're looking for a gap fill reversal. Same framework, same ideas, same concepts as what we discussed in the ES just moments ago, but those are the numbers here. So overnight high failure is 15,106. Prior high of day gap fill reversal is 15K flat. 15K flat. If the market does see a gap and go out of the NQ today, once again, be very cautious in this gray bar overhead. I'm not necessarily sure that I would want to see long entries building over here. It would really have to be some type, like for NQ longs, yesterday's break here and squeeze into the afternoon, that was really the long setup on the break of the prior equal highs. That's where it was going on, right? Now that we get this gap up, you just got to be more tactful about your long entries, because I don't want to call it chasing. You're not technically chasing the move if there's a setup, but just in the trend sequence, understand you're buying a higher high, not an equal high breakout. You're not buying a higher low pullback. All right. So just understand that here, that we have resistance overhead. 15,150. If you just want to split the difference right down the middle of the range and use one number, 15,150. All right. Anything kind of around that plus or minus, 10, 15 points gets a little bit iffy. So just to rank order things once again, situation number 1 looks like this, and then we'll look to see if we can get constructive after the gap fill reversal. Situation number 2 probably looks something like this. Gives us a flag or some sort of consolidation and then breaks into the afternoon. That way we have a well-defined stop, or at least there's some intraday structure to be trading against. I don't know if I love the idea of just buying a pullback, a simple pullback early morning over VWAP or something like that. But that would be number 2. This would be number 1. And number 3 would be just like, gap fill and then fall into the prior day's range, just like the ES. It's not technically single, maybe there are some single prints, but there are definitely fewer single prints in the NQ versus the ES. The ES structure to me on the downside looks a little bit more attractive to trade for, because the overnight low and your beginning of single prints are one and the same, whereas the NQ, the overnight low isn't quite there. It's not quite there, right? So to get short NQ outside of the gap rules framework fading this, it would really require a lower high inside the previous day's range, underneath 15K. All right, that is the NQ. And let's move along and take a look at the Russell. What's going on with small caps? RTY. What's going on with the Russell? Zooming in. Well, actually, let's not zoom in. Let's zoom out first. 4-hour time frame chart, understanding that we are still technically in bullish consolidation hanging out up here at the highs. Depending on if you're a trendline trader, I prefer horizontal levels. That I've built the case in the past for why horizontal levels are a bit more objective and they are stronger. But if you're a trendline trader, right, and you're looking at this as a flag, technically we broke it yesterday and we're opening above that trend line. Maybe we close the triangle up to the top there of the flag consolidation. It's a consideration, but the main point of the Russell 4-hour is that we're definitely sitting in bullish consolidation, right? Very, very mild pullback here, finding support well above the top of single prints. We remember that there's bad structure here, thin structure we should call it. So that's noteworthy. We didn't even come in for a test of that. The higher low is above, and if we can get back up to these equal highs, maybe the equal high break is on the table out of the Russell. Let's go to the hourly time frame chart, get a little bit more granular and zoom in here. Again, you can see clear uptrend. It's not even worth pointing out higher highs and higher lows. This is building out consolidation and balance. And once again, if you had a trend line, something that looks like this, you're certainly breaking that via time or with price on this very minor gap up out of the Russell. So with that out of the way, let's move to the 15 and take a closer look at this. So Russell 15, and then we'll, of course, for those folks just tuning in, I know it looks like we've got pretty good numbers this morning. If you're new to the stream, the next stage after the Russell is going through everything you see here on this core list. So bear with me, we'll get into those in just a moment. If you're a cash ETF, SPY Qs type of trader, Apple, Netflix, Tesla, all that good stuff, we'll get to it. So Russell rounds out the small caps, right? It's worth understanding because this is a risk-on versus risk-off proxy. And right now, the bullish consolidation that we saw in the 4-hour and the 1-hour strikes me as more of a risk-on indication. CPI this morning produces a solid move higher from the overnight lows, basically, up to the overnight highs. So I like that. That's a bullish indication as well. But you can clearly see that the gap is not nearly as aggressive out of the Russell. There's your prior high of day. Here's your overnight high. And we're just barely opening over the prior high of day. Right, a little bit of a mild gap up. So let's ask the questions, right? Question 1, mild gap up. So gap rules are technically in play. Are you going to try to fade this for a move lower, though? Absolutely not. Absolutely not. There's just no risk reward here at the Russell pre-market high that makes any type of sense for a fade there. So gap rules are technically in play. We'll just understand that what we want to see out of the Russell is a resolution of your prior high of day. You want to see a resolution of your prior high of day. So question number 1, gap up. Question number 2, opening at the overnight highs. That is technically bullish, but offers good risk reward potentially to the downside. Question number 3, overnight inventory out of the Russell is much more, I would say to some degree, it's net long still, but it's to some degree a bit more neutral just because of the up-down full retracements that we've seen here. So maybe I would call this like, I don't know, 80% net long versus the 95 and 98% out of the ES and NQ respectively. So overall, main idea here, the main focus should be if we can resolve your prior high of day 1903.40, if we can resolve that and stay above, you're looking for any sort of intraday bullish trade setups to get you into your equal high test on the 1-hour and 4-hour chart. And that move right there would be bullish for broad markets as a whole. That would support the bullish case in the ES. That would support the bullish case out of the NQ, right? So watching that there, anything that falls into the previous day's range, really watching value area high. Notice the consolidation from yesterday, very, very well-defined range here with two very equal highs. If we can respect value area high 1900, that would be bullish as well on a pullback, looking for a reversal there. Anything that gets deeper into value area is just consolidation. We can start to look for chop there. It's not bearish because remember the context of the 1-hour and the 4-hour, but it would be neutral at least on today's session. All right? That's the Russell. Talked about up, talked about down. Actually, we didn't really talk about down. The biggest short indication would be a flush that does this, breaks the value area, and puts in a lower high underneath. That's really only where the concern comes in on the downside. Any minor pullbacks like this or anything that chops around in value area here is exactly that. It's continuing to consolidate. This right here is the only large downside threat. And it doesn't really appear to be in play on the open, but once again, watch to see how your prior high of day resolves. 1903.40. All right, we've done it with the index futures. Let's take a look at the cash ETFs and see what's going on from this perspective. So, what do we see? What are we dealing with? What is the deal? What's the scoop with the spiders? So, make the split screen a little bit larger. We can clearly understand that we are opening on a gap up. We know that. We're opening up here around 436. Remember that our overhead target is going to be 437 even, roughly. That's the weekly expected move high and structure from the left as well, 437 there. So we're pretty darn close. I mean, 436 is intending the gap to be right here. I always say that I'm going to save that setting with these darn bubbles, but I have failed to do so once again. So what I will do is I will literally do it right here on screen. Check that off. And what we're going to do, so I don't forget this for next time, is to save this grid as, and we'll click save, and now we're good to go. All right, now I'm a man of my word. 30 seconds ago, maybe I wasn't. But anyways, what do we see? Gap up, right? So gap rules are in play. It's the same idea, same thinking as the ES, but of course what we can do is map out where that gap is going to exist, basically. So we're gapping up this morning doing something that looks like this. If the intended open is going to remain right here, let's edit the, maybe that's rectangle 2. Let's hope. Let's hope. Let's hope. Let's hope. 12. Yeah, it should be. Let's make that blue, yellow actually, and we'll go with a very mild yellow. Something like 80% opacity will help. And let's see. Does it show up on top? Nope, of course not. Thinkorswim's layering is sometimes less than ideal. So anyways, that's kind of unfortunate. I'm just going to delete that then. So we will remove rectangle 2, and maybe we'll just use horizontal levels instead. Let's try that. So here we go. There is that, and we'll make that yellow. Just pointing out where the gap close would be. It's your prior high of day at that 433.85, 86 level. And the current open is intended to be up here, 436.10. So once again, folks, the thinking is basically the same as the ES. There's no major differences. It's just the numbers that we're using. So a failure of the overnight high, something that does this, short through the opening print, looking for a move to close the gap. That's a terrible drawing. There we go. Something that does this is what the outcome should be, right? That's what the outcome should be if we are going to get a textbook play out of the S&P. So 433.85 prior high of day is the level. You're going to gauge whatever the opening print is. The opening print is. We're not going to get into that debate again. And the overnight high currently is set here at 436.40. We're sitting right on it. So there's a very good opportunity, very good chance we could make a new yep, there we go. Brand new overnight high. So we'll check back in on the ES primarily as we get closer to the open. That's in roughly, 24 minutes or so. But keep that in mind, right? Gap rules are still in play here. Gap and go still gets kind of interesting for that 437 if we can find a pullback intraday to support it. But when and if we get there, just understand that that is strong resistance, right? That is strong resistance, and you have to respect that in the sequence of higher high, right? We're sitting on a higher high coming into resistance. You want to be a new money long there? Probably not. Probably not, all right? So just be very respectful of 437 if you're not already long. If you are long, maybe you look to trim some up here, and that's that. QQQ, what are the NASDAQ numbers out of the cash ETF? What are the NASDAQ numbers out of the cash ETF? Well, first and foremost, we closed this prior gap on the cash index. If I auto zoom this, I guess we'll have to go to a daily, and we'll have to grab more than a year. Oh man, this is like ancient price action, it feels like, right? There's our prior gap from back here, and we closed that gap yesterday. So that's where it's coming from. Prior structure here at 368.25 is coming from this breakdown and the beginning of that breakdown, so we understand where that's at, right? If we go back to recent times, and let's go ahead and drop this back to an hourly, we can, of course, get rid of the gap lines. We'll put just the prior breakout level on there. It's going to be over this. There we go. 357.25 is going to be your number. So that's your ideal, like if the market does pull back, that's probably where you want to see it go in respect. We are opening over the upper edge of the weekly expected move. We're opening up here. Gap rules are in play, all of that good stuff. If the gap fills from today's session, your prior high of day is 360.58. I know it looks like we got a ton of lines on this chart, but it's really not so bad. If we zoom in on this, and I'll walk you through the sort of roadmap, so to speak, this is what we're dealing with. We are opening, or the intended open is at 364.15, so somewhere up around here. All right. If we open here, fail the overnight high, which it's going to make a new overnight high as we just continue to chat, perhaps it's right there, and then go through the opening print, we are looking for a closure of the gap back into the weekly expected move to tag up to your prior high of day, 360.58. Then we will look for a gap fill reversal. This should not be thought of as support at 362.97. It's the upper edge of the expected move. It should not be thought of as support. It should simply be thought of as, okay, the market is more content if we are inside of this gray box. It's not technically an area of support, okay? So that's a very important note, especially when it comes to what we're dealing with currently. Actually, now that I'm looking at it, if we look at the right-hand side of this chart with the 30-minute extended hours on, the only reason that this may arbitrarily act as support is because it was resistance in the pre-market. That's the only reason, right? It's not because it's the expected move high. It's not because it's a blue dashed line on our screen. It's because it was the previous high of the overnight range right here before this most recent leg up post CPI. All right, so I should have double checked myself, but if we pull back and you find support there, it's because of this prior structure. It's not because it's the upper edge of the weekly expected move. All right, 363. That's the number on a mild pullback. It's also about a half gap fill there. So Gap rules are in play. We talked about this ad nauseum in this morning's stream so far. A failure of the overnight high, short through the opening print. First look should be for a partial gap fill here. If we continue, full gap close here. We know the two levels. We know what we're looking for. We're looking for a reversal here when and if we get there. And keep in mind, folks, if you ever see a partial gap fill, if we do only get to here and then support off of it because it's overnight structure from this high, it tells you something about the nature of the sellers. The sellers are not strong if we only get a partial gap close. Remember that this is thin structure. There's no regular trading hour structure. That's what really constitutes it as a gap, right? So if it's only a partial gap fill, it means that the sellers didn't complete their job, their task, and therefore the buyers will probably overwhelm. You should be looking for a continued bullish edge in the market. All right, so that's your QQQ. Those are the levels. Those are the numbers. Your overhead resistance, 368.25. We just saw that off to the left when we were pointing out where the previous gap was coming from down here, right? So that is the Qs. Let's take a look at IWM Russell 2000 and the small caps. The hourly chart is nice and easy on the eyes. We don't have antique price action to be looking at from more than a year ago, more than 90 days ago. So these prior highs are going to be what's in play. We aren't really getting as strong of a gap up. We are still technically gapping up as we saw in the Russell futures, but it's not nearly as strong as the QQQ, which we were just looking at. If we zoom in on this and take a peek, right, we're opening right at or above 186.75. Is that technically the beginning of a bull flag breakout here? It could be. It certainly could be. I once again would just be an advocate for watching how this level resolves horizontally at 186.75. If we can stay above it, it's certainly helpful for the bull market, the bullish case across the broad market. There we go. And that would be helpful for the bull narrative out of the SPY and the Qs. We could look for gap and goes. We could look for just really solid reactions on a gap fill reversal, right? So buying the tag up to the previous high of day, or a partial gap close in the NQ and the QQQ that we just saw off of the overnight structure. That would be all reasonable if the IWM sees a firm resolution of this 186.75 in the upward direction, right? This is certainly helping the bull case right now. If we fall back down into range, it's not the end of the world as long as we're consolidating. The only bearish issue would be sort of like lower highs underneath 185. If we get lower highs underneath this consolidation low from yesterday's session, that's where the concern steps in. But notice what would have to happen. We'd have to fall back into range, chop around whatever, continue, break through it, lower high, and then do you really think that there's going to be enough gas in the tank to get a breakdown through that? I mean, maybe. Anything's always possible, but it certainly seems like a lower probability outcome on today's session. Seems like a lower probability outcome. All right? So that's the broad market through the ETF lens. Let's take a look at our core list of companies here. Apple is up first on the chopping block. What else do we see with the core list? Beautiful break of 182. We talked about this level yesterday, and we went off to the races. So your 182 worked out. Where are we in the trend sequence? We just saw an equal high break. Do we want to be chasing new money longs up here? We're actually not even up there. We're opening inside of range. You can see that here. Probably not. Probably not. You want to be looking for the next entry on Apple that's respectable in terms of trend sequencing. So higher low pullbacks or equal high breaks. We're not yet at a there's no equal high break going on if we're opening here. The higher low pullback is probably what you want to watch. If we can test 182 and find support there again, that would be solid. Looking for a break and retest on that 182. It's definitely a little bit more of a retracement of this break here from yesterday than what we want to see, but a lot of that damage was done pre-market, and we're already starting to rebound off of it with the positive CPI news. So not the end of the world, but certainly not warm and fuzzy on the inside about Apple right now. It would really have been better to see this open towards the highs. That way a mild pullback could have then been bought up for then an equal high break to get you to your resistance at 184.50, all-time high resistance, right? So not the best look in Apple on the open here, being so centered in the rally from yesterday. I would be cautious on this one. I would really wait and see if we can firmly confirm, that's an interesting string of words. If we can firmly confirm some sort of support here for a higher low on the hourly chart, right? A higher low on the hourly chart over this 182 breakout point. So that's really the main point of Apple, right? That's what you should be watching there. Netflix, how'd we do with CPI? Strong move in the upward direction, breaking out of this multi-day range. Remember that we talked about in the weekend update how the partial gap fill from last Friday was really a sign of strength, right? That was a sign of strength. So unfortunately, this gap up is going to make it so that we call this a, quote, professional gap up. It gets more difficult to trade here, already breaking through our level of interest. That's going to be at 427.75. In a picture-perfect world, we didn't gap up here. We opened in range, and then we went for the break, regular trading hours. So now we have to deal with the gap up. Gap rules will be on the table. So if we fail the overnight high, looking for shorts to fade this into here, then we'll look for the reaction off of 427.75. It does not have to give us a full gap close. If we think about what happened last Friday, that would be nearly the same, right? We open on a gap up, we get a partial gap fill, we go to structure here at 427.75, then reverse off of it, partial gap, because here's the prior day's high, right? Partial gap close, and then rotate back higher. That would be the watch out of Netflix. If it does go gap and continuation, it gets really difficult to trade that higher. Just not thrilled with the move out of the 2-bar range in the pre-market. So needs to prove it, right? Needs to prove that we have good location. Cannot really afford to just buy this on the higher high, noting that we're kind of in no man's land. There's no structure in here, all right? That's Netflix. Next up is Tesla. Gapping up, of course. What else is new? Everything's green on the CPI, except for Apple, apparently. But gapping up here outside of the multi-bar range, that's 2 bars on the daily time frame. Gap rules are in play, right? It's as simple as that. Gap rules are in play on everything that's gapping up. Gap rules apply to futures. It applies to the broad market ETFs. It applies to equities. So same idea. Failure of the overnight high. Look for a short through the opening print. Trade this thing in the downward direction. If it wants to gap and go, so be it. Looking for pullbacks over a VWAP and then continuation in the upward direction. If I could just encourage everybody in the chat to just be mindful of one thing, it's just on today's session with these gap ups, it's going to be very, very enticing to want to just buy everything on the open and just look for continuation. Just if I could just make everybody think before they pull the trigger on today's session about longs. If you could just take a split second and think about, okay, do I have good trade location for this particular setup? I think that's probably going to be more helpful than anything else, right? Just before any long positions are built, before anything really happens, just think to yourself, if I'm buying new money longs here, do I have good location, right? Who can sell to me? Think about it like this. Everybody who was long yesterday in Tesla, everybody who is long looking for a breakout, if they decide that they want to take profits, guess who's going to be their buyer? Guess who's going to be their buyer? You, as you try to buy this higher high, right? So just think about that. It doesn't mean that we can't move higher. Let me be very clear about that. The market can always do whatever the market wants to do, but to stay in the game, you got to make sure that you're always putting yourself in positions where you have decent location and a strong opportunity, at least, to see continuation out of the move. So that's all. Just be mindful of that. All right, that's a big takeaway for today's session with all these optimistic gap ups. So Tesla, gap rules in play. We know the deal. We know the drill. We know what we're looking for. Gap fill reversal would be more optimistic, right? So here's the deal, right? If I were trying to play Tesla long today, I'm not longing this. If it just starts creeping higher out of the gates, it might be like, oh no, Matt, you just missed a 4-point move in the upward direction, 3-point move in the upward direction, whatever. It's like, yeah, but I would have preferred this, and I'm going to stick to my plan, right? That pullback would have been way more attractive. Tight stop here, then we'll look for the full rotation to the next level, right? Maybe it doesn't get all the way there, but at least our location on the entry is much better. It's far superior. So just understand the dynamic of traders from here who want to take profits and you trying to buy for continuation. Now, don't get me wrong. Not every single person here will want to take profit. Some people will hold. Some people will add to the position. And, whatever the net effect of all of those decisions are is where the market will go. But nonetheless, I just think you want to position yourself at the best trade location. So, yeah, Richard L., you can't lose. Just buy everything. If you buy everything, then, you're good to go. Yeah. Yeah. Even buy the leveraged short ETFs, right? Then you really can't lose. Little sarcasm there. Google, what's going on with Google? We're short on time here. We've got 9, 19, and 30 seconds on the clock, so we're going to speed it up through the remainder of the core list, hang out for maybe a couple minutes, and then be on our way. Google, gap up. I don't want to sound like a broken record. You know the idea. Failure of the overnight high, gap fill reversal. What's more interesting about Google is just that this overnight high is the structure from the range. Right, it is the structure from the range at 124.75. So I would be very open to the idea, and perhaps Google would be a top candidate for the gap fill, right? This would be a top candidate just based on where it's opening and being at resistance, the top of the range already, okay? Everything else so far has been in no man's land. Meta, what's going on with the fantasy land? Speaking of lands, this also is opening at resistance, right? So prior resistance up here, market really struggled to get much acceptance over that 274.25. So if Meta can, stay here for the open, again, failure there, this is probably looking like an attractive setup for your gap close. Again, not going to be a broken record and walk through all of the same framework, but you get the idea. Meta would be a top watch for a fade. Right now, I would actually say that Meta would be the top watch for a fade, just based on the location here. Google probably after that, and then the broad market. NVIDIA, what's going on with NVIDIA? Big gap up, 401. Big gap up, and it's at the top of its little consolidation range post earnings, and it's just this may start to unfold as being tradable if we can get some acceptance over the 401 figure. So now all we've got to, not all, but what we want to watch out for is some continuation out of NVIDIA would be helpful. Then higher low pullbacks that then start to respect the 401 level over the top of range, definitely more constructive for, at least a test of this all-time high. So that's looking pretty darn good. We went from, having head and shoulders here, fake break of the neckline back there, to now inverted head and shoulders here, and well above the neckline, and even trying to take out the top of the range. So I like NVIDIA. Again, I wouldn't recommend that we chase it long here. We do have to contend with the gap underneath us, but over 401 is very interesting if we can build out and remain with some structure up there. Taking a look at Microsoft. What's up with Bill Gates and Softy here? What do we see out of Softy? Minor gap up, yes. Opening at resistance, yes. This is actually in a bit more of a neutral trend than perhaps your Meta. So maybe this is also a top contender on the short side for a fade. But nonetheless, you guys understand what's in play there. We know what we're looking for. Do we have overhead? That's all-time high. You're definitely going to want to have this level mapped out as well if we see a gap and go. That's going to be at 337.8. If you guys know me, I like my round numbers. We're going to drop that down to good old 75 cents, 3/4, and call it there. Yeah, it's technically higher. It's really got to be 85. Man, I wish I could be my usual self with the quarters, but it's really 85. 337.85. That would be the number. All right, if we do see a gap and go out of Microsoft, that's your resistance. All right, anything beyond that, all-time high is on the table. So again, use the gap rules framework. I know I sound like a broken record. You have the numbers though. Amazon, what's going on with Amazon? Gapping over the 127 prior high from here, well above the equal high breakout. 130, 130. Pulling back a little bit more aggressively. So overnight high failure. Yes, you know the deal. Watching for that. Yeah, I mean, it's really, the framework applies to almost everything that we have on the core list this morning. The only thing it doesn't apply to is Apple. It's opening in range. We saw the weakness here. Does not really look attractive to trade Apple until we can pull back and confirm possible support at the 182. All right. So that's really it. That's really it for the core list of companies. There's no like glaring setup that's like, hey, trade me, trade me, trade me. Everything's gapping up. Everything you want to just be very mindful of your trade location with. Let some price action develop. If we see gap and goes, wait for some structure to build out. Wait for some things that you can position against. You might miss the initial move. That's okay. That's okay. Don't feel like you have to grab that initial move every single time. All right, let's take one quick look at the ES. Take a tour through the chat in just a moment as well. And then we'll kind of wrap it up at that. So new overnight high. Look at that push here out of the ES. Continuing in the upward direction. And the analysis still remains on the table. One thing I will say is that the gap is starting to get close to our upper threshold of being greater than 20 points. We're not there yet. If you take your prior high of day 43.90, 44.10, right? So it's right on that threshold of being a 20-point gap up. It's not that these gaps, you can't trade them, but your expectations should start to be managed as we open on a gap north of 20 points, right? So this morning will be interesting. This next couple days, today's trading session and tomorrow's trading session is going to be extremely interesting, right? What happens with this structure? Is it enough to kick off rallies? And, in the back of my head, I think to myself, if the market just continues to go up, I've got enough tucked away in the long-term accounts where if I don't catch all the moves on day trades, it's okay, Like it's really okay, right? If you're investing outside of day trading, you just think to yourself, you miss a huge bullish run in the market, you kind of kick yourself, right? As a day trader, you're like, oh no, damn it, I missed a really solid setup. But then you remember, oh, well, I've got some exposure to it technically, right? So kind of try to balance those things out for the session as we sort of navigate through this really, really. I don't want to call it choppy because this is not trendy, but just volatile. Volatile is the appropriate word, right? As we navigate this volatile period, just kind of keep an open mind to, not needing to get every little piece of every single move. It's going to be impossible to do. So anyways, that's what I've got for you on today's session. Keep in mind that the futures roll is going to be continuous through the end of this week, right? So that's another complicating factor that's just not going to make things easy as traders flip over contracts from the M to the U. So keep that in mind. But anything interesting going on in the chat? Anything? I'm just taking a glance at what's going on over here. Sell the news after the Fed? Yeah, I mean, I don't know. There's no sense in really speculating on that. I think that we'll just deal with that price action tomorrow when it comes. The FOMO will get you. You're absolutely right, Tamar. J Powell is going to throw gas on the fire tomorrow? I don't know. We'll find out. We will find out. All right. Is that going to do it? I think that's going to do it. Nice to see you, Jay, with the gold cash bag. That's the original Jay with the gold cash bag in the chat, making an appearance. Nice to see you. Starlight, have a great day. Siege, INF, of course. Hope you all win. Cooking a brisket. That's about it from Noah V. That sounds good. Hopefully you follow Double Wide over on Twitter. Noah V, if you're a futures trader and you're into cooking like that, check out Double Wide Capital. Hopefully you're already following him. DWC. All right. Cool, guys. That's going to do it for today's session. Join the Discord if you're not in there already. It's completely free. Linked down below. You can just click on it. It's a redirect link. With this gap, I'm truly going to tune out so we can get focused for the open. Appreciate you, Toby Detroit, for the 199 there in the chat. Very much so appreciated. But with that, I am seriously out of here. I wish you all a green trading day, and I will see you in the next one.